Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to compare the best Canadian stocks in renewable energy sector. Here I chose 3 companies in this sector to compare with each other. Of course the list could be much longer than this if I wanted to include all of the Canadian stocks with renewable exposure, but these are the companies that have a strong focus on renewable energy sources in their business and not only a small exposure. These companies already operate green energy sources and make money from these assets as a large portion of their earnings. The 3 companies that I chose are TransAltas Renewables, Northland Power, and Algonquin Power, which I already analyzed their stocks in detail in 3 separate videos on this channel. I could include another company in this list, and that was Brookfield Renewable Partners. I didn't include them in this comparison video as I consider them a part of Brookfield Asset Management Company, and I prefer to analyze them as one company and not separate businesses. I also reviewed Brookfield stock in another video on this channel, and I will leave a link to all these stock analysis videos in the description box below. In this video, I will compare TransAlta, Northland Power, and Algonquin Power stocks based on 6 different metrics, and will choose a winner based on their growth history, balance sheet, business margins, dividend, investment risks, and valuations. Before starting the video, I want to emphasize that I'm not a financial advisor. This video is not a financial advice for you to buy, hold, or sell these stocks. This is just my personal opinion, and you should always do your own research before making any financial decision. With that being said, let's start this video. For comparing the growth potential of these companies, I looked at the income and cash flow statements of these companies and also their own guidance for growth in the next 1, 5, and 10 years. In my opinion, Northland Power has hands down the best growth history and growth potential between these 3 companies. Northland Power grew their operating cash flow by 10.5% in the last 3 years and has guidance for 7 to 9% year-over-year growth in the next 10 years, which is much better than almost no growth of TransAlta Renewables and a slower growth guidance of Algonquin Power for the next year. So Northland Power is the winner in the growth metric and will earn 1 point. For comparing the balance sheet of these companies, I looked at their financial statements, including their assets, liabilities, cash position, whether or not they dilute shareholders in the past, and their ability to not only pay the dividends, but also reinvest in themselves for future growth. In my opinion, none of these companies have a very strong balance sheet, but I think Northland Power and Algonquin Power have better balance sheets comparing to TransAlta Renewables. And therefore, there is a tie between Northland Power and Algonquin Power in this category, and each company will earn 0.5 points. For comparing margins, I looked at both operating margins and net margins of these companies. For utilities, operating margins are much more important as it shows how much profit a company makes on $1 of sales after paying for variable costs of production, such as wages and raw materials, but before paying interest or taxes. Higher ratios are generally better, illustrating the company is efficient in its operation and is good at turning sales into profits. Northland Power has an operating margins of almost 37%, Algonquin Power has an operating margin of almost 16%, and TransAlta Renewable has an operating margin of almost 18%. Again, in this category, Northland Power has the best operating margin and will earn 1 point. For comparing dividends, I looked at the history of paying out and increasing the dividends by these companies, as well as their guidance for future dividend increases. I think Algonquin Power has hands down the best dividend history between these 3 stocks. It pays a significant dividend with almost 5% yield, and they increased their dividend by almost 10% year over year in the last 10 years. On the other hand, TransAlta Renewables and Northland Power did not increase their dividend in the last few years. So Algonquin Power is the clear winner in this category and will earn 1 point. Here I looked at the debt to asset ratio of these companies, their short-term debts and operational risks, and also the safety of the dividend. I think none of these companies is really a low-risk investment by my standards, but Northland Power has a slightly lower risk, in my opinion, between these 3 companies, as they didn't have major operational issues like TransAlta Renewables and Algonquin Power in the recent years, and they have a slightly better debt management than the other 2 companies. So Northland Power is the winner in this category and will earn 1 point. For valuations, I used a discounted cash flow or discounted future earnings model to estimate the fair value of these stocks based on projection of their future cash flow into the present value of these companies. If you want to see the detailed analysis, you can watch my detailed stock analysis of these companies, but while all of them are overvalued, Algonquin Power has the best valuation between these three companies at this point in time. So Algonquin Power is the winner and will earn 1 point. After analyzing three major Canadian companies in renewable energy sector, I think this sector of the Canadian market is overvalued in general, and the stocks in this sector are traded at a huge premium at this point in time. The main drivers for this overvaluation are the trend in Western countries to shift towards green energy sources, the war in Ukraine, which caused spikes in oil price, and as such everybody is looking to replace oil with other sources of energy, and of course carbon credits, which helps companies in this sector to grow faster. Now let's talk about individual stocks and compare their points in this video. So TransAltas Renewables was winner in 0 out of 7 metrics, and it has a score of 0 out of 7. Northland Power was the winner in 3 out of 7 metrics and had a tie in 1 metric, so it has a score of 3.5 out of 7. Algonquin Power was winner in 2 out of 7 metrics and it had a tie in 1 metric, so it has a score of 2.5 out of 7. It is clear that Northland Power is the winner and in my opinion the best Canadian renewable energy business in the market at the moment. While it is a great business, I should mention that it doesn't mean you should buy Northland Power stock because as I mentioned in my detailed stock analysis video, the valuation is the most important factor, and I think Northland Power and all of these Canadian renewable companies are extremely expensive and overvalued at this moment. So you pay a significant premium to own these companies at this share price, and whether or not you should buy depends on your investment goals and also of course on your risk tolerance. There you are guys, these are my top Canadian renewable energy stocks. I hope you enjoyed the video, and if you enjoyed the video please leave a comment and let me know what stock you'd like me to review next, and please consider subscribing to the channel to see similar videos. Thank you for watching and I see you in the next video. Farewell.